not as much good stuff this morning as yesterday, so we'll see how that plays out. So SPYs yesterday didn't really do much. We zoom in. I think we were talking about in the morning meeting about this 243.10. You did get one quick wick down there right on the open. And popped up about 70 cents or so, 60 cents. Rest of the day didn't do much till right at the end of the day. There was some profit taking. But if we step back and look at it, it's just, after having consolidated for a week or so and putting in a new high, it's consolidating again. So we want to watch that 244 to 244.20 area to see if it continues to fail there. There's maybe a trade in this range until it breaks through one way or the other. IWM was the trade that worked really well, discussed in the morning meeting. I think the reason it worked well is this large move. It had already retraced 50%. And so we had two spots to look at. The first one was here in this pre-market support area, where the final leg started a few days ago on the uptrend day. And then obviously below that where it broke out from. But it dropped out there right on the open, bought it, and immediately popped back up to, not immediately, but within the next half hour, popped back up to 38.60s, which had been resistance on the uptrend day before the final push into the close. Projected there, held above 38, and made a push to the next resistance. So it was a very clean day for IWM, and it moved quite a bit. Failed at the 39.60 and closed right below 39. So we got some levels to work off of now. Certainly this 39.65 right here, where it pushed into the close from 38.75, and then the support area from the open where it bounced from. We can trade off of any of those levels depending on how it sets up. Okay, so first stock is AMBA, down $2.50. They had a slight beat, and then it seemed like they guided down by the exact same amount for next quarter. So nothing really has changed. So let's step back and look at how people were positioned coming into this. So we know that after coming off to $50, it trended up for a couple of months all the way to 65. Some news came out, did heavy volume, sold off from 62 all the way down to 56. And so a lot of people have been able to get out of the stock on this gap down here. And so you would think with news that was meh, beat by a little, gets down by a little, that it would be bought here into this. I don't know how big of a bounce, but 58.20 here, the bottom of this consolidation range from the last few days. And then if they really just decided to blow it off, it would go all the way back to 60. So it did overshoot in the after hours. I'm sure people were kind of nervous that it was below 56. It looks like it did pretty decent volume in the after hours. By the way, you can always check that on the scanner. There's an after hours button. You just hit after, and it shows you the after hours volume. This morning, it's showing signs that people realized probably wasn't worth selling off to that. So we have the risk now because it double bottom here below 56 in the after hours. People come in this morning, it's about 56.5. That it may just pop up to this first target area. But what you'd like to see ideally is a quick drop out on the open. I don't know if we get this again here, but I would definitely be a buyer into 56. That's the percentage play. So, as I said, these yesterday, the first three things we talked about worked really well. There's a short video. If you click on the archives, they put it in the morning meeting archives for some reason. Those were nice setups. These are okay today, but I just don't think it's as strong, especially since it's already moving away from this good buy area at 56. So perhaps right on the open, they pop it above 58. It fails there, and you can make the short trade. KUYS. So they beat, but they guide in line. I thought this one might actually be a little bit of a better setup, but it was not as liquid, so that's why I put it second. Here's the daily. And so spent quite a bit of time after running up from 32 to 38, consolidating between 35 and 38 and a half. And this is a little bit messy, failed breakout. Then bought ahead into earnings, and nothing that impressive coming to earnings. So I'm skeptical of the gap up here. It was a nice beat on earnings and revenue. The only reason this type of gap might hold is because maybe the company has a history of lowballing conservative estimates. That's certainly what Apple has always done over the years. I'm not familiar with this company, so I don't know if that's their modus operandi. But that would be the only reason for it not to feed from these levels here. So technically there is no resistance because it's making an all-time high following earnings, but there was a little bit of selling in the 43.5 area right when it opened up. So I guess what we'll have to do is when it opens, 43 and 43.5 would be the spots I'd be looking for sellers. And if it pops, and then you just get your failure, it starts to hold below 43, and you look for your gap fill. I put 40, 50 to 41 as support. This would be the spot I'd be looking if I was shorted to get flat into. I would change my opinion of it if it just had a quick kind of drop out on the open and started to consolidate in this 43 area and then broke to the upside. CALA. So this one got fast tracked for a drug. Take a look at the last week or so. So this already ran up from 11 to 17. So perhaps that was based on the good results already. FDA formalized it by giving them the fast track. So there might be nothing new there. So, and 17 is obviously very clean resistance. If you look over the last couple of weeks, put in the high at 1730, then it held a little bit lower, and then it bounced from the low 15s back up to 17. So clearly 17 to 1730 is a tough spot for it. It's already sold off from there $1. I guess people caught on to that. Kind of like yesterday with ACOR. So yeah, I'd be looking at a short on this one. And then if it showed a lot of buying, if bids were holding above 17 and then held above 1725, I'd say, hey, the market cares about this. But the burden is definitely on the buyers to prove after this huge move up to 17 that it can actually sustain these prices and not get rejected. And then finally, EXAS, they did a secondary at 35. I think, feeding these on the long side over the last 6 months has worked really well on the flush below the secondary price. I bought a little bit. I got hit for a little bit at 34.50 about a half hour ago. I popped back up to 80 cents. Sold most of it. I'd love to get a flush a little bit lower, even closer to 34, and then trade it, back up to the high 34s, and then probably hold some, maybe for a day or two to see if it can work its way back above the secondary price to 35, 35.5, 36. From yesterday. So I just mentioned ACOR. This was the fourth trade that I put on yesterday, and it was a script that did it for me. We talked about it in the morning meeting. People kind of caught on. The news wasn't that big of a deal. Probably wouldn't have an impact for a while, a year or two. And so they sold it hard from 18. In those scenarios we talked about, usually you get a lower high. I thought 17 was the most obvious spot. My script got me short there, right on the open, into 17. And, tried to break above there again into 10 o'clock. It failed, and then I was off the desk when I was getting covers here and here and here. So I have a few shares left. 15 had been the target area for me based on where it had been the prior couple of days. And the other thing that I was thinking was, it actually was trending down coming into this. I guess unless it starts to hold below 1490 or 1480, you don't want to. The short isn't good on the short side here. So So that trade is pretty much done for me. It did pop to 1560 and fail there. So 15, 16, 16 are some spots to look at today if it catches a bid. Again, still short a few shares from 1695. GIII, this is another one that worked really well. As I mentioned in the review after the close yesterday, right on the open as I tried to get shares above 25.70, I couldn't get any more shares, so I just had the shares from the pre-market from in here. But very quickly it came back down below 25. If you were looking to trade it on the short side, there was one pop back up to 25 now. When you see wicks like that, it's clear that a lot of other people are thinking the same thing. Failed in the pre-market hard down move. I'm going to short a pop back into 25. And so you see these wicks, it could never really even sustain back up to the 25 level. Eventually when it took out kind of a morning low below 24, came off another 1.5. When I was here, I think what happened was I covered it, and it kept this move, bought it, and then it popped back up about 50, 60 cents, sold most of it, and so I wasn't here for this second down leg in the afternoon. It did bounce from 22.5, $1, so it's a pretty good reversal there in the afternoon. The way I look at it today is 22.50, 22.65, some support in that area right there, 23.5 to 23.65 resistance. So that's it. Not much to do there. If you log on late, it was a short meeting. It should be probably posted in the next 5 or 10 minutes inside the real-time room. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.